Okay, what's going on, traders? So today we are back with another video, and this time around we want to talk about the basics of Forex trading. Okay, because I think there's a lot of subscribers who's new to trading, and we want to start creating more videos which cater to beginners, right? To teach you the basics. Okay, because like we always say in our channel, we always say that it's important for you to understand the basics first. Because anything that you build, any strategies you build, is always on is built on the foundation of your basics. So if you do not have a strong understanding, of concepts, or you do not have a good foundation, then anything that you build on it, right, will not be you will not be successful in that aspect. Okay. So in today's lesson, we want to address 3 questions. Okay. The first question is what the currency market is all about. Okay. Second would be what does a typical currency look like, and how do you read it? Okay, what does it mean? And lastly is what is a pip? Okay, so let's go into the first question. So the first question is what the currency market is all about. So I think you probably trade Forex. You kind of know that the Forex market trades 24/507. Okay, it trades from Monday to Friday. Okay, and it's one of the biggest market. Okay, it has trillions in turnover. And the reason why it has huge turnover is because most of us use leverage. I mean, you should be using leverage because without leverage, it's very hard for you to make money. Okay, but that's a separate topic about how much leverage you use. That's a separate topic. Previously recorded a video about what's the ideal leverage. So if you have not watched that and you are curious about what kind of leverage you should be using for your account, then check out that video. Okay, so the currency market is still very liquid. Okay, which is something that we like, okay, because it doesn't really gap often. So one of the issues with trading is stock market, like you buy stocks, right, is that price opens and closes every day, it gaps, right? So sometimes even with a stop loss in play, your loss can be very big because price get past your stop loss level. Okay, so that's not it's not very ideal in for your risk. Okay, but in Forex it's easy because it's very liquid. So that means you can get in and out easily, okay? But the trade-off is that because it's very liquid, you can get in and out easily. It is also very volatile, okay? So price movement moves very fast, okay? So sometimes you need to be fast, okay? In fact, sometimes when we send our signals out, sometimes by the time you see, price has already moved, okay? That's a very common problem, okay? But then again, you don't have to catch every single move. You just need to catch like maybe 5 good trades a month, right? 5 trades that really run, right? It's enough to make you a profitable trader. And over time, right, your returns will compound, and that's enough to make you very successful already. Okay. Anyway, next on to the next point. Okay. Forex trading is a zero-sum game. Okay. That means someone must lose in order for you to profit. Okay. So if you really understand this, you will know that only the best in the industry make money. Okay. So if for example, if we are trading, let's say that we are trading against you, so to speak, we are competing, right? Because if you lose money, we might make the money instead, right? So if we are busy on Saturday preparing, we are putting in the effort to study our trades, we are putting in the effort to invest in ourselves, but you are not. It's likely that you're going to lose, okay? So this is a very competitive sport. It's a very competitive game, okay? So you need to understand that if you want to be trading, you're competing against the best of the best, okay? And only the best make money. So for you to make money, you need the experience, okay? I mean, just think about it logically. Okay, let's say you've been trading for maybe months, 3 months, 6 months, perhaps even a year, okay? We've been trading for 15 years, okay? And we've lost a lot of money, we have a lot of experience. How likely do you think that if you will compete with us, how likely do you think you'll come out as a win? Okay, this is not to put you down, but we're just saying realistically, if you do not, if you do not have the experience and you do not put in the effort to learn, okay, it's likely that you lose money. Okay, so you must understand that this is a zero-sum game. Okay. Last point I want to talk about is that in stock trading, you are buying a company. Okay, meaning that you just buy a company. Basically, you exchange cash for stocks, or rather a paper that say you own the stock. Okay, but in currency, it's always relative. So what do I mean by relative? What I mean by relative is that you're buying one currency and you're selling another. Okay, you cannot just buy one currency. Okay, you cannot just say I buy pound. I just buy euro. That doesn't make sense, because when you buy pound, you need to give something in exchange for the pound. That is why currencies is quoted in, for example, pound USD. So if you are buying pound USD, that means that you are buying pound and you are selling USD. Okay, no worries if you're confused, because we'll cover this in the next slide. So the second question that we want to address today is what does a typical currency look like and what does it mean? Okay, so in this case we have a pound dollar. Okay, you can see over here pound slash dollar. Okay, USD 1.51258. Okay, that's the price fit. Okay, so if you look on the left, pound in this case will be known as the base currency and the USD will be known as the code currency. Okay, so if you look at, for example, Aussie dollar is the same. Okay, meaning that the left, right before the slash on the left is a base currency and on the right is a code currency. Okay, so what does this mean? Okay, this code means that when you are buying pound dollar, you are buying pound while simultaneously selling USD. Okay, because remember in a previous slide I said that in Forex we are always buying one and selling another. It's not possible to just be buying pound. Okay, so conversely, if you sell pound dollar, then you're actually selling pound while simultaneously buying USD. Okay, so in the example above, how do you read this is if you buy, okay, you have to pay 1.51258 USD to buy 1 British pound. So basically, when you buy, it's always with reference to the first currency, base currency, and it's 1. So to get 1 pound, you need to pay 1.51258. Okay. Conversely, if you want to sell 1 pound, right, you will receive 1.512158. Okay, that's how you read the codes. Okay. So if you're using MetaTrader like us, you will see something like this. This is called when you're executing an order. So you can see that there's actually 2 price feeds. So I just want to clarify this because some of you are still new. You don't understand what's the concept of codes, right? You don't understand the difference between the bid and the ask. So hopefully we simplify it for you so that it's easy for you to understand. Okay. So this is MetaTrader 4. You will probably see 2 codes called the bid and the ask. Okay. As a general rule of thumb, okay, how do you remember this is that? Always remember that you will get the worst rate, okay? This is how you remember it. Always remember you get the worst rate. So what do I mean by that? So if you are selling, you look at the 2 price feed, how do you, 2 price codes, sorry, right? How do you know which price you get? Ask yourself, which is the worst rate? Do I sell higher or do I sell lower? Okay? And know that you always get the worst rate. So if you are selling, that means you sell at the lower of the 2. So in this case, you sell at 1.24331. Okay. Now, if you are buying, it's the opposite, right? You will buy at the worst rate, which is the higher rate. So if you are buying in this case, it will be 1.24358. Okay. So that's the easiest way to remember, you know, the bid and the ask. Just always remember that you will always get the worst rate. Okay. So on the last question, or rather the last thing that we want to cover today would be what is a pip? Okay. This is fundamental for you. It's very important. Okay, you must always know what a pip is. In fact, in our channel, we always say, oh, we made 20 pips, we made 40 pips. What does this mean? Okay, so a pip is the last decimal place of a price code. So over here, we use back the same example of euro dollar. So I'm sorry, that's not euro dollar. I can't recall what currency is that. Doesn't matter. Okay, just take for example euro dollar instead. Okay, let's say the code now is 1.1075. Okay, so if it changes to 1.1076, then price is set to increase by 1 pip. Okay, so you can see in this case that it's just basically a last decimal point. Okay, of course, if it went from 1.1075 to 1.1080, then that would be a 5 pips increase. I mean, it's just simple maths. Okay, so just look at the last figure over here. Let me just highlight it for you. Okay. Yeah, then the other thing that we want to share with you is also about fractional pips. So don't get too confused, okay? So some brokerages offer fractional pips. If you are using our brokerage, you will know that yes, our brokerage do offer fractional pips. So what is fractional pips, okay? It's otherwise known as pip dates, or however you pronounce it, I mean. Okay, so what this means, right, is look over here, okay? Let me just zoom in. Okay, the last figure over here, you notice there's a bit smaller. The font size is a bit smaller. This 1, the font size is smaller. This 8, the font size is smaller. So what this is trying to tell you is that this is a fractional pip. Okay, a fractional pip is basically 1/10 of not a pip. So 1 pip is, just think of it as 1 pip is 1. A fractional pip is kind of like a 0.1 pip. Okay, why do brokerages have this? They do this so that you know, to make their price rate more competitive, right? To also have greater accuracy. Like when it comes to your take profit, it comes to your stop loss, there's more accuracy because there's additional fractional pip. Okay, but for now, if you're a beginner, just take note of, just understand what a pip is. Okay, that's enough. You don't really have to bother about fractional pip, and you don't want to get you don't want to confuse you. Okay, so that's about it. So in summary, okay, we talk about what the currency market is all about. Okay, so we said there's a 24 hours market that opens Monday to Friday. There's a trillion in turnover. Okay, we talk about how does a typical currency look like and what it means. Okay, we say that there's this base and code currency, right? We are always simultaneously buying and selling currencies. We cannot buy, for example, pound on its own. And we also shared that this to remember where the bid and the ask, to differentiate between the bid and the ask, just ask yourself the question, you know, ask yourself like, what's the worst price I could get? And that's the price that you will be getting when you enter a position. Okay, lastly, we cover what is a pip. Okay, a pip is the last decimal place of a price code. Okay, so that sums up it. Let us know what you think about this lesson. Let us know what kind of basics you want us to cover, because now we'll be gearing this channel towards covering the basics, because we don't want to keep coming out content that is too advanced, right? Some of you guys, your foundation is not too strong yet, so we don't want to give you, you know, we don't want to give you all these tricks and tips when your foundation is not built. So we want to build you up. We want to make sure that your foundation is strong, right? Once we have maybe 30 videos, 50 videos that enforces your foundation, and you know, you really watch it, okay, you go through the all our lessons, you learn the basics, then you move on to learn some of the tricks that we have learned over the years. Okay, so let us know what you think below. If you are new to our channel and you haven't subscribed, please subscribe, because these videos are meant for you. Okay, till then, we'll see you in the next video.